the purpose of today is to kind of give you an overview of captive insurance, what it is, but also give you the ability to ask questions as we go along. Just a reminder, if you're muted, you can unmute yourself when you have a question, and feel free to interrupt me at any time. Sometimes you have a question that's hot and you want to get it answered, feel free to do that. So captive insurance, what we do is we create and manage the captive insurance company for the business owner. A captive insurance company is pretty unique, right? It's a business strategy. And what you're trying to do is you're creating a private insurance company that's owned by the business owner, all right? So it's a way to manage your risk in a lot of ways. And also it's a good business strategy overall. Now, of course, this works for any type of business, but you got to have a certain level of revenue for it to make sense. Now, anybody that does $1 million on up, it's something you want to look at. Okay, so gross receipts total gross revenue of $1 million more, all the businesses combined, then it makes sense to at least look at it. So any type of business can do it. Physicians, manufacturers, construction, auto retail, there's a tremendous amount. There's any type of business has risk. And so that risk can be covered inside a captive. Now, when you take a look at the approximate, the structure of a captive, it's really simple. The owners of the business will also own the captive. We do not, as Captive Nation, own the captive. We simply manage it. We create it and manage it for the business owners. So what happens is your business is going to pay retail premiums to your captive. The business gets a deduction for that. The premiums are tax-free at that point to the captive. All right. And I'll discuss a little bit more about that later. Should your business have any claims, then that is when we can you file a claim, you get paid. That's how that works. Captive really does 3 different things. It's going to protect your business. It's going to decrease taxes. It's going to build wealth. It does all those things at one time.
Ken, question.
Yeah.
Ken,
yeah.
Question. Sorry. So on the insurance premiums, is there a minimum that one has to have in premium outlay to have it go through the captive?
No, there is not.
Okay.
I mean, we've got people that contribute as little as $75,000 a year on up to $10 million a year. It's just that there's certain fixed cost, right, of having an insurance company, and so you got to do X amount of premium in order for it to otherwise it's a pure expense at that point if you go because of those fixed costs. So no, there is no minimum amount of premiums you have to put in. And that's a great point, because some years you may put in 100,000, $500,000, or some years you may put in 0 because you need that money to expand that year or whatever the situation is. So you can decide year to year how much you put in. Protecting your business, that's the primary purpose of a captive, is to protect the business. This integrates with your traditional commercial insurance. You're not dropping your traditional commercial insurance. It integrates with it. And you're going to have access to policies that are not available commercially. Okay, so some of these policies are unique. They are written in a very wide scope in order to pay you if something were to happen. A lot of these policies, your traditional commercial insurance is not going to even offer. Okay, or they're going to have so many exclusions on it, you're not going to even know, you may not get things paid. Some of the top insured risks for a captive is the business interruption insurance, collections receivables, coronavirus, right? Some of the impacts of that can be covered within a captive. Commercial limits and exclusions. I was talking to a guy yesterday that he has over 100 different businesses. And what he's finding out is a lot of the commercial insurance he has, they're not paying for things. Why? Because of the exclusions, right? And so that's what a captive will cover, a lot of those exclusions. cyber risk, data loss, ransomware. This week you heard of the beef industry getting hit with ransomware. Again, you know, if you have captive insurance, that insurance policy will pay for those losses and even make a payment to, you know, if they're trying to hold you captive and make sure, and you have to make a payment. Loss of key client, concentration of client. You may have one client that makes up 80% of your revenue. You can insure them so that if you lost them, you would get a check for them. Loss of a key employee. Talked to a guy yesterday about that. He says, I've got one key employee I'm trying to keep. If I lost him, I would lose a significant amount of money. Again, ensure that if that were to happen, you're going to get a check to give you time and money to go and replace that individual. Loss of key supplier is another one, and regulatory change. You know, coronavirus, that there's all kind of new regulations, right? They cost money. And so you can get those paid for through a captive. Rental income replacement, that's a big one if you have any clients that have that have real estate. If somebody bails on you early, doesn't finish out their lease, you would be able to collect the rest of their income that they would have paid you by use of a captive insurance company. So that gives you an idea. There's literally over 1,000 different policies. Okay, what we do is we talk to the business owner. What concerns you? You know, what are you not getting coverage on? We look at your insurance policies. We find out, hey, where are the gaps, exclusions? What are you not getting coverage for? Something else to remember, you are creating a separate corporation, which is creditor proof. It's very hard to penetrate a captive insurance company. So the money you put in there is safe money. Nobody can get to it. The second thing that people like about captives is there is a unique tax advantage. This is a way to decrease your taxes so that you can keep more of what you earned. Those premiums that you pay from your business over to your captive are a deductible expense, okay? When the premiums go over to your captive, this is where it gets unique. There's a special exclusion for small insurance companies that allow you to exempt up to $2.3 million per year in premium and pay no tax on it. That's pretty significant. So you get a deduction over here on your business side. You get another deduction on your captive insurance side. You keep the money, and that's the way that works. Now, eventually you do pay taxes on it, but it's at half the rate that you currently pay. So you distributions are taxed at lower rates. Just an example of kind of how the tax situation works. Let's say you had $500,000 of income left over at the end of the year. You could put that into a captive through paying captive premiums. By paying insurance premiums, the money goes over here. Now your taxable income on your business side is zero. Okay, over in your captive, you got $500,000 of income from all those premiums. You can exempt that amount through the 831B exemption, and now your taxable income is zero. If you're in the 40% tax bracket, you just saved over $200,000 just like that in that first year. So something to keep in mind. The other thing that this does is that it builds wealth. Most business owners are interested in making money or they wouldn't be in business, right? And so this is a way for you to actually increase your cash flow, because the premiums that you pay, you get to keep. They're retained inside of the captive. Typical commercial premiums are not. You write a check to CNA, you write a check to State Farm, they're gone forever, right? Whether you lose it or not. So you get to keep the money that you send over to your own insurance company. The second great thing about this is that it's investable. The guy I was talking to yesterday, he was like, hey, we don't want the money just to sleep. You don't want your money to sleep. You want to be able to invest it, and you can. So inside the captive, you're able to invest in stocks and ETFs and mutual funds, Wall Street funds. Additionally, we're going to reinsure all those policies you have within the captive.
And life insurance, Ken, life insurance. They can invest in life insurance.
Actually, you usually do not invest in life insurance inside the captive. There was a big case against that a couple years ago. They put a tremendous, unreasonably large amount of life insurance inside the captive.
Abusive.
Yeah, and it's abusive. It's abusive in this particular case. And so you can do some. It just has to be reasonable.
Well, I meant
Typically,
once the profitability comes out
right,
and it's
typically,
taxed at that level. That's
right.
what I meant.
So typically the way you would do that is you're able to pull money out of the captive, and then that's when you can do other
Correct.
financial planning.
Thank
such
you.
as life insurance and things like that. That's the most efficient way and overall the smartest way to do that. The other thing that this does is that it's going to reduce your traditional commercial insurance cost. I'm thinking, wait a minute, we're getting more insurance. How is this going to lower my costs? Well, what we do is we can shift some of that risk from your traditional commercial insurance over to your captive. And sometimes it means increasing the deductible on your commercial insurance, which will drive down your premiums. I'll give you an example of this happening. We had a commercial, a construction company, and their general liability, workers' comp, commercial auto, everything all in ended up being $2.5 million a year. This was a big construction client. We started a captive. We increased deductibles. It drove down their premiums nearly $1 million. We wrote a deductible reimbursement policy. So if they had to pay their deductible on their traditional commercial insurance, they could just grab it from the captive. Saved them $1 million a year. So when you think about how can I help my client, hey, this is a pretty good way, right? This is a pretty good way to do it. Additionally, a captive is going to possibly be a way of a new profit center. If your clients manufacture anything, they can offer an extended warranty or insurance on that particular product. They can pay or not pay for it. It's up to the business owner whether they want to charge it or not. We have some clients that they don't charge. They just want to have that competitive advantage that says, hey, my warranty is longer than yours. And that really increases sales a significant amount. So something to keep in mind there. So when you look at a captive, why in the world would I choose a captive? Here's why. When you look at risk, okay, your traditional commercial insurance is covering this amount. There's a lot of things you're currently self-insuring for. Your gaps, your exclusions, your deductibles, business risk. So you're self-insuring for that. And let's use a big number. Again, not everybody, but just for simplicity. Let's say there's $1 million profit. You're going to get taxed at 40% on that. You're going to have $600,000 left. Makes you sad paying all those taxes, doesn't it? It's no good, right? And you're not covered for all these things: business interruption, cyber risk, coronavirus, gaps, exclusions, all these things we talk. You don't have any coverage. Why? You're self-insuring. Or there's another alternative. You can create a private insurance company called the captive. Here's your captive. You own it. Everything that goes in there, you have. Your business is going to move that money, that $1 million over here, and now look at your tax. It goes to zero. You saved $400,000 just like that. Now you got $1 million in there. Now you're investing that money. So what a unique business strategy this is. I'm protecting my business. My business is what makes me a lot of money. I want to protect it. You're going to protect it with $10 to $30 million worth of insurance coverage just from this $1 million premium. I decreased my taxes. You think your client would be happy, or you think you can land a big business client by saying, hey, I think I can save you $100,000, $200,000 this year? They're going to listen. And then you have the investment income. And then you have the potential for new revenue by offering these extended warranties or insurance on your product. This is a unique strategy where you actually end up with more cash at the end of the day by doing a captive than not doing a captive, right? So you're financially ahead by doing this, and your business risks are covered, right? So you're going to be able to keep making money. So because you have all this risk covered from all these insurance policies now, that's covering your business. Just remember, you do have a true insurance company. This is not a product. You have a insurance company. And what we do is we create and manage that for you. The operations must be for risk management purposes. All the policies are actuarially supported. We use an independent actuary to see what kind of risk you have. And so that's one unique thing that we do. We don't do it ourselves. We hire an outside independent actuarial firm. Any corporation has to be capitalized. Typically, it's around 20% of the premiums, or around 60,000 right now. This tends to fluctuate depending upon what's going on in the industry. Risk transfer and risk distribution, that is a requirement. Transfer is easy. Risk distribution, all the premiums have to be distributed through a risk distribution pool participating in that, and we can go through that another time. Here's some things you want to keep in mind. There's 4 things that you're like, well, what in the world? Why do I need a captive insurance manager? What's the point of that? Can't I just do this myself? Well, I'll tell you what we do. All right. The first thing we do is a feasibility study. Now, this is where you're going to find out, does this make sense for my client or not? We do this for no charge. Okay. We've been doing it a long time. And so we're going to be able to say, hey, do the benefits outweigh the costs? That's what we want to find out. Does this make financial sense for the client? And so we're going to be able to show whether it does or not. We do a tax analysis to see, all right, how much taxes would they really save? We do a policy analysis. You're going to be able to get an idea of, okay, these are the types of policies that would apply. You don't have to figure that out. Your client doesn't have to figure that out. They don't have to look at their commercial insurance and say, we don't have enough risk, because there's a lot that they're not getting coverage for, and we can show them what they can get coverage for. We document the business purpose. We select what domicile we're going to be in. All of our captives are domiciled, formed, and established right here in the United States. We don't do offshore stuff. So all of our stuff is onshore. There's just too many issues that go on related to offshore things. The regulations are different, and the bottom line, they just don't comply with IRS guidelines. So that's why we think it's important to establish it right here in the US. And then we talk about the captive structure. So once we do this feasibility study, show it to the client, they're like, yes, I like this, let's move to the next stage. The next stage is the underwriting stage. This is where we hire the independent actuary who's going to look at the business and say, okay, you have this amount of risk. To cover this amount of risk that you're currently not getting coverage for, you've got 20, 25 different policies you can choose from. At that point, the business owner, they can decide, hey, I want this policy this year, but not this one. And then every year they get to decide. So because things constantly change in a business, they may decide, okay, now I want this, or they may say, I want all of them. I want all the policies that I can possibly have. So this process of underwriting is, one, it's a necessary step in forming the captive, but you're not committed at this point. You still don't have to do it. But this is a necessary part if you do go on to form the captive. It really forms the basis of it, because it's going to identify the underinsured and unidentified risk in your business. And it'll price each policy. So if you're wondering how much would this particular policy be, well, then you're going to have your answer once the underwriting comes back.
And Ken, excuse me, what industries do you feel would benefit from setting up a captive versus not?
Yeah, that's a good question. What's really popular are, it's any type of business has risk, and we form them from all kinds of business but manufacturers are a great one. Anybody that has a manufacturing facility. But it's really strange. It's not like we particularly focus on one particular industry. We've got a tugboat operator in the Northeast. We've got a crane operator on the East Coast. We've got a manufacturing facility. We have home builders. They're really popular because of the warranties they have to offer. They're able to deduct expenses on those. So it's really all over the board.
What about medical practices because of the high premiums in malpractice insurance?
Absolutely. Absolutely. So we set up some emergency room physicians, you know, those emergency room places that pop up everywhere. Set one of those up last year. So yeah, any of your medical professionals, doctors love these things. They love them because what they end up doing, just from an overall view, is they figure out, all right, how much money do I need to live on? All right, the rest of that I'm going to put into the captive via paying insurance premiums. And so they do that. And it's a way to safeguard the money that they earned, right? Because remember, they're creditor proof, grow their money and protect their business and lower their insurance cost. I mean,
What about malpractice? What about the malpractice insurance, which is a big bulk of the premiums?
Yep, it's a big bulk. And so it's state by state, the malpractice premiums and the regulations relating to that. But absolutely, we're able to lower those premiums because we're able to take some of that risk over into the captive. And so it'll lower their cost of insurance and they end up with more money at the end of the day. So yeah, doctors love this, attorneys love it. So it's a good point. Good point. The next stage in this is the formation. Let's say the business owner is like, I like this. This looks good. This makes sense to me. Let's go ahead and form it. Forming the captive usually takes 30 days or less. A lot of it has to do with how quickly their staff, the business owner's staff, can get us the information. We move pretty quick on it. But we do everything from forming the corporation to obtaining the tax ID numbers, articles and bylaws, to obtaining the insurance license from the state insurance department. Also, we create the policies. We issue the policies. So all that's done by us. So the business owner does not have to hire additional employees. This is a complete turnkey deal. We create and manage the whole process for them, all the regulatory, corporate, and tax requirements. Once it's formed, the next step is just the management of it, right? Every year, we have to do an actuarial analysis, and so we coordinate that. There has to be an accounting done, right? We have to look at the bank statements every single month. We're communicating with the state insurance department as far as what the investments are. So there's claims management. If you have a claim, how does that work? There's risk distribution, right? So we're handling all those things. Every year, there's an actuarial that has to be done. Every year, there's an independent audit by a CPA firm that has to be done. There's premium taxes that have to be paid. So there's all these things. We handle all aspects of that. So this allows the business owner to just sit back and enjoy the benefits of a captive without having to manage the whole entire process. So when you look at overall, that's it. There's the feasibility, underwriting, formation, and management of it. It's a turnkey operation for us. That's what we do, right? That's what we do. We create and manage this with a CPA mindset. And so when you think, hey, I wonder if this would work for such and such company, hey, give me a call. Tell me, the main thing is, what industry are they in? And the second thing, what is their gross revenue? From that, we're able to get an idea of what kind of risk they're going to have and what kind of premiums they're looking at. And we can do that feasibility study. And then you can then choose to show that to the client to say, hey, this is an option for you. You're always looking for different strategies. This is a great strategy to have. So I'm going to open things up. Does anybody have any questions on that? How that works?
Ken, good job. I have to go to another meeting.
Okay, sounds good, Ron.
Stay well.
Very well. So these are, a great business strategy. When overall, you're going to protect the business, you're going to decrease taxes, and you're going to build wealth. Another thing this thing does is it works well for opportunity zones. There's certain risk on opportunity zones. This is something that can cover the risk of opportunity zones. Yes.
Ken, Jerry, and we've talked before, as you know.
Yeah.
Yeah, I thought that when you set up captives, you aggregated like type companies to share in a captive. Are you doing single company captives? Isn't there a distributed risk or a distributed insured requirement? And what am I missing?
Yeah. So yes. So Jerry, there is a risk distribution requirement. we're not forming a group captive. They're each their own captive insurance company just for that business owner. Now we take the risk from this business owner and distribute it amongst a bunch of different industries, people that are in
Even
all.
though it's not the same risk coverage.
Absolutely. And if you think about it, really, that's the safest way to do it as well. Because if everybody's all in the same industry and something bad happens to the industry, everybody's going to get hit hard from it, right? Whereas if you have different industries.
Okay, can you do the one just for an industry group? Can you do that too?
Good. Yeah.
So I could go to you for that kind of stuff.
Absolutely. Yeah.
And we have that. We're doing a lot in the opportunity zone space. Again, I think we've talked about this. We're doing a lot of small, mom and pop investors buying like properties to lease. Broken Bow is a very popular place. Nashville is a very popular place. Smoky Mountain is a very popular place. And they get a set of insurance through a VRBO or Airbnb, but it's really crappy insurance.
Absolutely.
For instance, it doesn't cover intentional damage by your tenants.
Right.
Well, almost the worst damage you get is intentional damage at your Airbnb, right?
Absolutely.
So
a captive would cover that. A captive would cover those costs.
Well, what I would think is you would set up, what I'm seeing as an interesting possibility is identifying uncovered industry risks and then actually sharing that. I mean, again, they're not kind of correlated risks. In other words, it's not all going to go one way or the other. Like,
right.
The whole industry isn't going to suffer intentional damage on their Airbnbs, right?
Exactly. Right.
But and identifying a bunch of uncovered risk and going to the market. I don't know. And maybe there's restrictions on marketing that. I don't know. And I mean, it's not. No. We're not providing the insurance. We're just providing the opportunity to be part of a captive.
Right. Right. Yeah. No, you're exactly right. It is that's a scenario and situation where yes, those risks could be covered. Could we focus in on one particular industry? Yes. And say, because everybody has risk in that. I tell you what's really popular right now are the SPACs, right? You've heard of SPACs, SPAC. They start as a small company, they become public, then they go and acquire a big company. And so what we're finding out with that, a lot of the D&O insurance is crazy expensive. And so that's a focus, right? So there's different industries that have, you could do the same thing for manufacturing. You can say, okay, they all have that.
We have a bunch of security clients, both personal and cyber security. They provide the guys with muscle, or they, whatever. And there's a lot of coverage that they don't have. They just
absolutely. And so what we can do, Jerry, any particular industry you want to go after, we can, create marketing material just for that particular industry, right? That says, hey, your particular risk in this industry are boom, 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 boom. All of this can be covered under a captive insurance company, lowering your cost. So yeah, I tell you, another industry that's getting really hit hard right now is the trucking industry, transportation, logistics. They are getting destroyed on their commercial insurance. It's really expensive. What we're doing is integrating a captive into their insurance strategy. It's lowering their premiums significantly.
Mm-hmm.
So you're getting more coverage for less money, saving taxes all along the way and keeping those savings. So yeah, it's a tremendous business strategy to put on top of any business that you have going on. So any other questions out there? Anything you thought of? Hey, look, there's this something that I've been thinking about, or does a captive work for this? I'm happy to answer. So
I'm going to follow up by
go ahead. Okay. Yeah, that sounds good. That sounds good. So guys, I appreciate you joining me today. We're going to have this recorded if you like to watch it later. Thanks for joining. Feel free to give me a call if you have any questions whatsoever. 866-944-5588. Actually, it's 888-944-5588. Don't forget that. And then Ken at Captive Nation. I'm happy to visit or look at any clients that you have been thinking about. Wonder if this would work for them. Hey, I hope you enjoy your day. Hopefully it's productive. We'll see you next time. Thanks for joining.
Take care.